Thank you, Zaim. Good morning, Sam Sujatra. My name is Calvin, Senior Analyst in Economics Trade and Regional Integration Program at ISIS Malaysia. So we are now in session 2, and I've been asked by the organizers to go straight into the session in view of time constraints. So some brief housekeeping remarks from the organizer. Each speaker will be given about 10 minutes, but it will allow around up to 13 minutes for short remarks, and then this will be followed by a short Q&A session. Please use the chat box to submit your questions. So without further ado, let's just get to our speaker's remarks. Shan, the floor is yours.
Thank you very much. Bismillah ar-Rahman ar-Rahim, and good morning, ladies and gentlemen. First of all, thank you to Tansari, Michael Leo, and Jessica at KSI for inviting me to this prestigious forum. Let me start off by saying that 2022 will be tougher than 2021. It won't be easy. And what we have seen last week when equity markets went down, investors lost $1.2 trillion just in one day. So I think in the latest newsletter that we have shared with our investors, we continue to see global economy going in a volatile mode. Recovery is an illusion, and financial fragilities are going out of the roof. And the way things are moving in Asia, China still takes the lead. If you see the latest numbers coming, if you pick up Financial Times, 18th January, China has surpassed $6 trillion in trade and commerce, which is simply remarkable, taking into account when global economy is still passing and undergoing COVID recovery. China did manage to make quite a splendid growth and splendid trade and volume. What China has done, we shared in 2020 when the COVID was very hot, that China used dual circulation strategy. What is dual circulation strategy? To support domestic demand and encourage local businesses. And by May 2020, China already had a trade surplus. An Economist magazine in August 2020 made a remark and created a report that how China has come out of this COVID situation very successfully. And if you see what China has done last year, and who are the major trading partners for China? ASEAN, trading volumes 5.67 trillion yuan. Number 2, EU, 5.35 trillion yuan. US, 4.88 trillion yuan. Japan, 2.4 trillion. South Korea, 2.34 trillion yuan. So that signifies that ASEAN is still very much relevant for China, and ASEAN has made a splendid recovery and still the #1 trading partner of China, and China really values ASEAN at the macro level. Coming to ASEAN and the regional economies, we at July IQI, we shared in our December newsletter the growth outlook, and I think it's more or less the same. I was very surprised in 2021 when in January 21 we said Malaysia's growth will be 3 and 4%. I am glad that Tansari mentioned that all the figures were coming up 7, 8, 9. I thought, we are sitting in a kindergarten class, repeating numbers. On 13th August, Bank Negara said that Malaysia's GDP growth for this year, 2021, will be between 3 and 4%. All the fancy figures were coming, but the challenge is not many people really understand what is happening in global economy. And they try to concentrate on one single country, that Malaysia's GDP will be 7% or 7.5%. But they fail to take into account about regional economies, about global economy, what is happening in Europe, South Korea, Japan, China. So I think IQI, July IQI and Bank Negara were on the same page in terms of GDP outlook last year. So what we are saying for 2022, Malaysia 4 and 5%, Economist magazine is saying 4%, Indonesia 4.7 and 5.3, Economist magazine is saying 5%, Philippines 4.5 and 5.2, Economist is saying 5.1, Singapore 3.5 and 4, Economist magazine is saying 3.7, Thailand 2.5 to 3.3, Economist saying is 3.1, Vietnam 5.5 and 6.2, Economist magazine is saying 6.6. It is based on the premise that most of these ASEAN economies are coming very strongly. They have done vaccination. Macroeconomic stability takes its head. higher exports and FDI numbers. Tourism, we expect to commence. Stable monetary and fiscal policy, and the government will continue to use the amalgamation of fiscal and monetary policy to drive growth. Stable infrastructure, tech-savvy labor growth, and higher commodity prices is going to boost many economies in ASEAN region. For Malaysia, we expect last year, I think Maida and METI, they have done a remarkable job. Trade and commerce touched over 1.2 trillion ringgit. For Malaysia, we expect ringgit. Last year, I was surprised on 12th August, just one day before Bank Negara was about to make the GDP outlook, DBS said that ringgit will be trading at 440. And everybody was saying that ringgit is going to collapse and da-da-da. By 31st December, ringgit was trading at 4.17. At July IQI, we make the forecast at the start of the year, not in the middle of the year. We don't revise the figures. We said 3.67 and 4.10. So we were slightly close. We didn't say 4.40. For this year, we are saying ringgit will be trading between 3.75 and 4.15. Inflation to be 2.5 and 2.75. Globally, inflation is showing its head. Fed, ECB, Bank of Japan, and Bank of England, they have lost control of inflation numbers. Oil prices, I think we are more or less on the same page with global players like Goldman Sachs, JP Morgan, Bank of America. We are saying oil prices will be trading between $77 and $107 per barrel. Right now, oil prices are up by 11% year to date. It's trading at 86.78 cent per barrel. In budget deficit, we expect to be between 5.5 and 6.5. And discount rate, Bank Negara has done a good job. They played their cards very strategically in 2020. And they have maintained a very stable monetary policy, and that has given structural stability to ringgit. So I think Governor Bank Negara deserves the praise that she has managed the monetary policy landscape very nicely. So overall, at July IQI, we are cautiously optimistic about the growth outlook of Malaysia. Thank you very much.
Very comprehensive look on the entire region, and bring it back to Malaysia as well. So with that, could I move on to Dr. Jurita? If you could give us a little bit about the regional trade agreements, RCEP, and how it affects the regional outlook. The floor is yours.
Thank you so much, Kelvin. Thank you so much. I would like to say thank you to the organizer for inviting me. This is, again, a very important time to be looking ahead and looking at the region and also its impact of different frameworks on the Malaysian economy and also the Malaysian economy's outlook. So I will try to keep this within 13 minutes. So I will start a bit about Malaysia. So as a small open economy that depends on exports, the government of Malaysia and also Malaysia as a whole understands the need to expand potential market size beyond our national borders. So even though exports have surged after prolonged lockdowns, the trend and the pace of premature deindustrialization experienced by selected subsectors in our manufacturing sector need to be reversed if Malaysia aims to be a developed country in the next decade or so. As we all know, to date, Malaysia has signed various FTAs, both in bilateral and also multilateral forms. If these agreements were important for Malaysia way before the pandemic, it is now even more important for Malaysia to be an active and ratified partner to both the RCEP and the CPTPP. So as we all know, Malaysia has been a negotiating member of TPP from the very beginning after over 7 years of negotiations with various rounds of bilateral and multilateral discussion with member countries. CPTPP was finally signed by all members except for the US. And ISIS, National Interest Analysis study found that on balance, by looking at the economic pillar, the social pillar, and the security pillars, it is in the interest of Malaysia to participate in the original TPP. But But when we look at both the CPTPP and TPP now, it include discipline chapters on labor, environment, ISDS, and also IPR that I believe will support trade activities in a sustainable manner, not necessarily sustained, but sustainable manner. And this is very different from the other traditional FTAs that we see, because those traditional FTAs only cover chapters related to trade in goods, trade in services, and investments, and that's it. So such shallow agreements may push for the elimination of tariffs, but not necessarily the non-tariff measures and the non-tariff barriers. So with a special mechanism in reporting, newly introduced NTMs in a single window, CPTPP member countries are hopefully able to eliminate the usage of unjustified non-tariff measures, which we have seen to be damaging for all trading partners, and this includes our ASEAN partners. So when we look at the RCEP and CPTPP, they were both negotiated amidst a global malaise, and its ratification were and are to take place during the pandemic and post-pandemic for selected countries. As we see now global demand strengthening after a very long pandemic, and as trade tensions also continue in the region and beyond, many economists believe that not just the RCEP, but also the CPTPP are capable of reshaping and also boosting the region's existing framework, championing more cooperation in different facets with a more committed and binding nature. So here, I feel that with the right policies in place, both the CPTPP and RCEP may be able to re-energize Malaysia's economy and also the regional economy, with again emphasizing the right policies. Foreign investors would be attracted by not just Malaysia's prospects, but also the region's prospects, and they will again commit more investments. And here is where job creation can be expected. And when I say job, it's not just quantity, but also quality. And with the attraction of international expertise, it can only strengthen Malaysia's competitive advantage. So again, investments in high-tech industries will also enable developing countries like Malaysia to benefit from anticipated technology and also technology knowledge transfer. And again, we can also preempt higher productivity along the region's supply chains as well. So let me just shift our attention to RCEP, because government has signaled that RCEP will be ratified by Malaysia in the next few months or so. And for your information, RCEP has already entered into force. So this is the time for us to be pushing for ratification. So I feel that 10 ASEAN member countries and 5 of its ASEAN existing +1 partners were very proud to have forged this agreement with or without, in this case, without India. This achievement is significant. Collectively, RCEP's 50 member countries would represent, if all were to ratify, it would represent about $26 trillion in GDP, and this is around 30% of global GDP. So the moderator, Kevin Cheng, and I, we co-wrote a paper, and it's up on the ICIS website. We also found that RCEP comprises of 1/3 of the world's population, and it is estimated to be larger than the US-Mexico-Canada agreement, and even bigger than the EU and also the CPTPP countries put together. So again, if Malaysia were to ratify both of these mega trade deals, I believe that the manufacturing sector will be one of the biggest gainers in the economy, especially with the drive for the industry to participate in the 4th IR and also the digital economy, which was just announced recently through the budget and also the various blueprints. So let me just go quickly into welfare gains. for the original TPP, in terms of welfare gains, Malaysia was expected to be one of the countries to gain the most, given that ratification takes place in a timely manner. So with the original 12 TPP members, the US would have reaped 0.5% change from the baseline by 2030 when it comes to economic welfare. And this would range up to 8.1% for Vietnam. So again, World Bank simulation also mentioned a similar outcome where smaller countries like Vietnam and also Malaysia were expected to attain relatively large welfare gains. But again, coming back to today, coming back to the CPTPP today, with the current members, without US involvement and Malaysia not having the first mover advantage anymore, the welfare gains are not going to be as large as before. But if Malaysia were never to ratify, we are going to be left out in the CPTPP bloc. We will lose an opportunity to gain or to benefit from such an arrangement. So for instance, if the US never joined the CPTPP, which is highly likely, it will lose an opportunity to gain about $120 billion or 0.7% of its economic welfare. So again, there are many things that we can explore in the discussion. We can look at potential partners for the CPTPP and also the challenges for Malaysia in ratifying both the RCEP and CPTPP. But in a nutshell, I feel that the CPTPP and the RCEP are needed as it goes hand in hand with the realization of the fourth IR blueprint and also the My Digital Blueprint. Nevertheless, it is important also to note that with or without CPTPP or the RCEP, challenges such as financing, MSMEs inclusiveness, and also scarcity of digital talent need to be solved if Malaysia wants to grow its economy into a mature, advanced economy that is powered by the production of high value-added products and also supported by relatively abundant skilled workers in the near future. Thank you so much.
That was a good primer on some of the regional agreements that we're facing in the coming years. So one thing I would note is that Malaysia already deposited our instrument ratification for our RCEP, I think sometime last week. So it is something that's very timely. And I'd like to move on now to Dr. Park. Perhaps you can give us a little bit more color to this discussion, sort of intersection of the regional economic outlook and how all these regional agreements fit into all of this. With that, over to you, Dr. Park.
Thank you, Kelvin. I would like to take this opportunity to thank KSIS organizer for also inviting me and being able to allowing me to share the studies that we have been doing in ADB. Let me share this slide. So first, let me share a brief summary of ADB's latest forecast that has been released in December 2021 as Asian Development Outlook Supplement. Well, this revision accommodated the new data releases, including the third quarter GDP outcomes in most economies. First, the developing Asia's economic outlook remains broadly positive. Although there has been a slight adjustment to the regional forecast, the downward by about like a 0.1 percentage point from the earlier forecast. The region is expected to grow 7% in 2021 and is expected to grow 5.3% in 2022. The forecast for the Republic of China, what we call a PRC, is actually China, and India have been markedly down, reflecting the third quarter GDP outputs, GDP outcomes. For China, especially the 2022 forecast was also lowered from 5.5% to 5.3% as exports are expected to stabilize a bit. And there's also concerns over the heated property sector, especially by the some of the default risks in a large property company. And there are slight upward adjustment to the Central Asia. This has also accommodated the third quarter outcomes, and given the rising commodity prices and also higher public spending in this region, in this sub-region. For Southeast Asia, there's a bit of a variation. Forecasts for Malaysia and then Vietnam have been revised down a bit as both economies impose the strong restrictions on to contain the COVID spread, and also and there's a bit of resurging cases in Southeast Asia toward the end of this last year, and this might actually affect a little more on the recovery outlook. But in general, there has been not much of change. I mean, it's just a minor change, downward revision by 0.1 percentage point. The next slide, please. Okay. Despite a modest revision to our growth forecast, risks to the region's economic outlook remain tilted to the downside. Of course, the COVID-19 remains the biggest risk. The continuing risks of the new infections and also the emergence of new COVID variants continue to pose threat, while the vaccine rollouts are still a bit uneven across and also within borders, and combined with the effectiveness of the vaccines being a bit also waning, this could hamper economic recovery, as we have seen this last year. At the same time, policymakers must pay attention to some of the significant risks going forward. First, we continue to see the geopolitical and trade tensions among the region, among the world's largest trading partners, and global supply chain appear to experience persistent episodes of disruptions, which could also hinder the recovery in trade and increasing the trade costs, and also feeding into the inflation. Monetary policy normalization in the US is also added risk, as inflation in the States may prompt the faster and quicker interest rate hikes by the US Fed. As we have seen in the past, emerging financial markets and economies are quite vulnerable to sudden changes in the global liquidity condition. And as experienced in 2013, the episode of taper tantrum could again repeat in the region. And also over the longer term, over the medium to long term, as the region navigates the the recovery, we need to watch out for the risks of debt sustainability, rising inequality, and increased episodes of natural hazard, extreme weather events linked to climate change. Next slide, please. Well, as mentioned, that there is already some announcement and expectation for earlier U.S. Fed interest rate hikes, and the risks to the region is again underpinned by increased debt level in the region, as well as the pickup in the non-performing loans in the region. As you can see in the chart on the left-hand side, the region has seen an increase in debt ratio across almost all sectors, actually. Comprising both private and public sector, as well as even within the private sector, households and corporate. So across the board, we have seen an increase in the debt ratio, while we have also seen creeping the non-performing loan ratio in quite a few selected Asian economies, especially as the non-performing loan has been held back by the monetary and then fiscal support in the region. If the monetary and fiscal support wanes over the recovery phase, this could actually lead to again another pickup in the NPL ratio. So this does presents the significant risks to the region. Next slide, please. But the region's trade has seen quite a sharp pickup in the second half of 2020, but that recovery momentum has weakened a bit in the second half of 2021, and as the global economy experienced greater uncertainty, and also with the emergence of Omicron variant, there was a greater the uncertainty over the over the economic outlook and the recovery strength. So this has to some extent weakened the trade recovery momentum. Next slide, please. Fortunately, the pandemic again underpinned the need and recognition of the regions to strengthen the regional cooperation. The region, many of the regional economies in especially East and Southeast Asia are quite reliant on trade and export-driven industrial structure. So given the difficulties in the flow of the goods, and then the complicated customs and and also some in the supply chain logistics across the region and the world, the regional economies have made extra efforts to remain open and even strengthen further its regional cooperation. So that helped the region to sign ReCEP in November 2020 among ASEAN plus 5 economies. This ReCEP represents the most ambitious application of the trade agreement in the Asia Pacific, and it's also offering a stepping stone for deeper regional economic integration. It is expected to fortify the rules-based multilateral trading system, at least within ReCEP members, enhance also confidence in the Asia Pacific markets, and support a more vibrant trade and investment environment in the region. The economies, the ReCEP members have been also demonstrating the commitment to adoption, to the ratification, and also the implementation of ReCEP. It is the ReCEP is entered into the force in January this year already, which is faster than expected. And but the content of the agreement may not be as deep as CPTPP, with a little less comprehensive coverage. However, ReCEP is intended to be a living document, living agreement. It contains a built-in work plan to deepen its provisions, and is expected to grow and expand its coverage in the future. The development and implementation of this built-in agenda will determine the level of and the extent that the ReCEP members can unlock the potential of ReCEP in bringing value beyond the network of the existing FTAs in ASEAN and ReCEP members. Next slide, please. The earlier last year that we have embarked a study to estimate the potential income gains from ReCEP. We included this U.S.-China trade conflict, but this could be actually even considered as the baseline as is now, given that the negative impact of this U.S.-China trade tension. ReCEP actually offset. ReCEP brings the benefits to economic benefits to offset quite most of the negative impact. For the world, the ReCEP brings $263 billion, which outweighs the $188 billion. And next slide, please. But the income gains are quite different, of course, across economies. As earlier in the panelists mentioned, that Malaysia is placed to gain significantly from CPTPP, and also expected to gain additional the economic benefits from ReCEP. In terms of the trade gains, it really opens up trade opportunity. Our results suggest that the trade diversion is much less than trade creation by ReCEP, and it creates significant exports especially for the ReCEP economies. Next slide, please. So in conclusion, the recovery momentum in developing Asia is weakening amid the arrival of new variant. We need to sustain market confidence and ensure adequate liquidity, given that with the increased economic uncertainty, and then very uneven progress of the recovery, there is a big risk that the external shock associated with the monetary policy normalization in advanced economy could have a spillover effects to the macro financial stability in the region. Especially high and rising the NPLs require policy attention, especially focusing on the early and preemptive measures to address these NPLs and prevent them from building up to systemic risks in the banking system. Also, the post-COVID reorganization of the global value chain will require very strong regional cooperation to contribute more to resilient economic growth and recovery. And again, as a conclusion, the regional cooperation is needed to mobilize finance for resilient and sustainable post-pandemic recovery. So let me stop here, and then I would be happy to have a more discussion further. Thank you.
Thank you, Dr. Park. So I'd like to remind everyone who has questions to please place them in the Q&A or chat boxes down below. I currently don't see any outstanding questions. Nonetheless, I think there is a sort of difference in how we're talking about the growth outlook, in that I think there are two aspects. One of it is the short-term outlook, we're looking at 1-2 years. Another one, we're looking at the longer-term, sort of medium-term aspects of the growth outlook, which we're talking about RCEP, CPTPP, and the potential welfare gains to that. And then for that, we're looking at a horizon of 5 to 10 years, a bit longer. So there is that difference in the way that we're talking about growth. So RCEP is, has been long touted as providing impetus for the post-COVID recovery for the region. But we are also talking about, longer term. These gains are, for the longer term, right? So Dr. Park's simulations show that the income gains through trade creation and other welfare gains are for as far ahead as 2030. And it's unsure with the long tariff elimination schedules, with a lot of exclusions. A lot of countries in RCEP already have pre-existing trade agreements. It's unclear how much benefits many of these countries will receive in the next 1-2 years if we're talking about the short-term growth outlook. And I'm curious about, what do you think about this, Mr. Shan? Would you like to respond to that? Sort of how these trade agreements can affect the regional growth outlook in Malaysia or other ASEAN countries in the next 1-2 years, whether there's any benefit or is it more of a longer term sort of horizon we're looking at?
Already I have shared, I think RCEP is very much relevant. TTP is unrelevant. Asia is the growth story. I still remember when I met Jim Rogers when I was studying at University of Chicago. He said in 19th century, everybody was rushing to London. In the 20th century, everybody was rushing to New York. In the 21st century, everybody is rushing to Asia. Asia is the growth story. I think Malaysia has made a strategic move because trade is the name of the game. So the way China is moving up, China will remain very much relevant, and China will be driving the growth story for many economies. And with ASEAN, total trade is around 5.67 trillion yuan, despite COVID, despite economic fragilities, despite lockdown. I think ASEAN has come out very strongly. And what is the best part about ASEAN is that the governments have managed to contain this virus by getting the population vaccinated. If you go to Europe right now, not many people are vaccinated. Go to US, I spent 5 years in the US, I understand US economy, US consumers very well. They are not interested in getting vaccinated. So I think in Asia, people are very disciplined, they're civilized, they're educated, and Asia will come out much stronger. I tend to differ with one of the panelists. She said, Asia will weaken. No, I think Europe is struggling, North America is struggling, but ASEAN and Asia will come out much more stronger. And the reason is macroeconomic stability. Wherever you have macroeconomic stability, investors will move in. Wherever you have economic confidence, investors will move in. Where you have consumption patterns. In the last 15 years, 2 factors have become very significant. One is economic confidence, and the other is fear. Wherever you have fear in the economy, FDI is low, consumption patterns are weak, Government don't have policy instrument to spur growth. It is the Asia where governments have money, where people have money, where governments have policy instrument. They have the policy lever by using the amalgamation of fiscal and monetary policy to drive growth. That's what all the countries are doing. Look at China. Since 1990, I have been hearing China will go down, China will go down. They have used dual circulation strategy, which is more or less all the Asian countries are using. What is dual circulation? I repeat, support domestic business and encourage domestic demand. I think Asia is very relevant. RCEP is a good move. Malaysia has made a strategic move to join this RCEP. Thank you.
Okay, I guess there are no further questions in the Q&A. I'll continue to cycle through my own questions. So one of the key downside risks to the regional and global economies, in my opinion, is the intersection of global monetary and fiscal tightening and how that might affect countries in the region, in ASEAN and in Malaysia. And Dr. Park, I remember you had one slide on sort of the financial risks of normalization, and I wonder if you could sort of elaborate on that a little bit more. On specifically on which countries in ASEAN are most highly exposed, and how should and can Malaysia respond to these risks? Dr. Park.
Well, the risks of the financial stability actually comes from more historic accumulation of these debt. In fact, even prior to the pandemic, there has been a very low interest rate around the world, which led most of economic agencies, including the government and then the private sector, to take on the debt. When those debts are not used for productive investment, these turn into the non-performing assets for the lenders, including the banks and the financial sector. And that's what happened actually. And this situation has a bit aggravated during the COVID, given that the COVID situation urged the government to increase the spending in the public spending to contain the virus impact on all, even people's health and lives, as well as trying to support their the SMEs, and also ensure some of the businesses and industries have the continuation. And these increase the sovereign debt level quite substantially in many Asian economies. And at the same time, the private sector was not in the different situation, especially like the SMEs, facing lockdowns. They needed the working capital, and they had to actually also borrow substantially. And while these the fiscal and then the monetary the stimulus packages were quite essential and unavoidable during this wide disaster situation. These extensive the monetary policy accommodation kept the interest rates much lower than what the normal market would have actually have seen. So that again, I'm not sure if which one is the right word, is encouraged or forced the private sector to take on more debt. And we've seen this, the debt ratio going up across all different economic sectors. And that makes the situation quite vulnerable to any changes in the financial and then the liquidity condition. in Asia, especially with the a bit kind of like a middle ground of financial sector development, like emerging market economies, tend to experience sudden capital outflows. Given that their capital markets are not as deep as advanced economies, and they still rely significantly on the investors from outside, the international investors who the capital inflows from also the outside. So when this liquidity condition reverses, and this may lead to the financial market stress and also some turbulence, instability in financial market and sectors. And if these economies are experiencing an increase in the non-performing assets, especially in the banking system, which is the core of their financial systems in many Asian economies, this could lead to a more systemic financial risks.
Thank you, Park. So I think moving on now a little bit to RCEP, we've been talking about welfare gains, and I'm just wondering, what are the opportunities ahead for RCEP, given its open architecture, given that it may increase in size in the future, and what more specifically are the opportunities for regional cooperation, right? So we've been talking a lot about regional cooperation in driving growth and etc. But what exactly are specific avenues that we can look at towards increasing sort of this regional collaboration and cooperation, and how can that work to increase or catalyze growth in the region? Dr. Shrita, would you like to respond to that?
Thank you, Kelvin, for the question. So let's take a look at RCEP's welfare gains. So compared to existing ASEAN +1 agreements, we already expect RCEP to set a higher standard. With a somewhat deeper commitment, RCEP countries may reap higher welfare gains in the long term. So studies have shown that the welfare gains of the original RCEP countries will increase between 2020 to 2030, and the gains will be varied for different countries. So again, this is with India in the picture. So for Korea, for example, it may achieve welfare gains of about 3.4% from the baseline by 2030. It was also highlighted in previous studies that the welfare gains were calculated based on the drastic elimination of non-tariff barriers in several sectors like services and also logistics. So if these NTBs were to be cut or to be eliminated by 20%, then you would see these kind of gains for Korea. So in the near and medium term, however, there will be adjustment costs. Inevitably, this will occur, resulting in lower gains for some member countries. And again, RCEP would be influential in the immediate term because it has the capacity to streamline FTAs and also improve the noodle bowl, spaghetti bowl effect experienced by this region. So we can see that immediate change in the next couple of years. Again, the alphabet soup of bilateral and multilateral FTAs, and also there are different levels of commitments, have increased the cost of trade in the region. So with RCEP as being the main platform, so you can see this cost going down almost immediately. But on the other hand, RCEP will not be able to eliminate complications stemming from existing agreements. So it can, however, standardize and also harmonize discipline issues related to rules of origin, dispute settlement, competition, intellectual property rights, and also e-commerce. And again, such predictability would be comforting to investors. So I see this as having a positive impact in the next few years or so. So again, with investors' confidence, RCEP will be significant regionally and globally, and it can transform existing global value chains into a more integrated one, into a more seamless hub with, again, supported by lower trade costs. Once again, the tariff barriers, the non-tariff barriers are eliminated. So some studies have also shown that countries without existing FTAs among the RCEP partners will benefit more than existing partners of RCEP members. So, but then there's also this development gap between member countries that we should take into account. For example, RCEP do extend special treatment or differential treatment to lower income countries like Cambodia, Laos, and Myanmar. But again, as this is it's a progressive, so it's going to be able to upgrade itself in the next few years to come. And I hope that more chapters, more discipline chapters on labor, on environment, and on SOE, for example, can be introduced with a deeper level of commitment. Yeah, thank you.
Yes, so we have about 4 minutes or so remaining, and I'd like to cycle to the question that we have in the Q&A tab. I guess just really quickly, maybe take this as an opportunity to close out as well. So moving to the China aspects of the China risks, right? So how much concern does China's growth slowdown and maybe more specifically its macro financial risk within China, and how much of concern does that affect growth in ASEAN and especially a trading economy like Malaysia? So that's the first question. And the second question is, what is your view on the supply disruption? How long will it last, and how much will it continue to be to drag down regional growth? Mrs. Chan, would you like to take those two questions first, and then I'll move on to Dr. Park.
Thank you. China will be able to control her financial challenges. We expect China's growth to be between 5 and 6% for this year. Secondly, in terms of supply chain, I think it's not the supply chain issue. The main issue is demand. The demand is going up because they have not been able to have enough demand during the COVID, but now demand has come up very strongly. So it is a demand issue. Supply chain issue will remain for the next 2 years. Global economy will not recover before 2025. So we expect global economic fragilities to continue from 2022 to 2024. Geopolitical risk is one of those major factors. There will be some bankruptcies. There will be sovereign bond risk. And above all, there will be systematic risk, which has already come into the market. When I say systematic risk, it means higher inflation and higher discount rate. So I think global economy will have tough time for the next 3 years. It will only recover in 2025. Thank you very much.
Dr. Park, would you like to give a few thoughts on these questions?
I don't really look at China very specifically, so I don't really have a fundamental explanation or expectation for China specific, especially by the Evergrande. But if China does slow, in fact, that is one of the main downside risks in Asian economic ADB's Asian economic outlook, and if China does slow much greater than what's expected now, then the impact on the rest of Asia will be quite significant. What we have noted is that during the pandemic, the trade and then supply chain in Asia remain much more resilient compared to the global and then global trade and supply. And then also extended to the first half of 2021. And this could be hit very hard if China experiences trouble. In fact, a lot of the regional trade in Asia is really anchored on its trade linkages with China. So if we kind of separate the Chinese trade, the regional trade in terms of these value chain becomes much weaker. So the Chinese impact on ASEAN, especially the ones that are relying heavily on trade, will be quite significant. In terms of the supply chain disruption, I tend to differ in terms of the inflationary pressure. This is, I actually feel that the demand is not as strong. There are a lot of also downside risks to the demand resilience, but the supply chain disruption is quite fundamental, and this is also a bit structural. While of course, as the economies do exit from the pandemic situation, and demand will definitely again encourage the businesses to resume the normal operation. But the supply chain disruption will likely stay while the economies continue to experience the risks, uncertainties associated with the pandemic.
Of course, certainly. So we are now 2 minutes past time, so actually we have a lot more to discuss, but I think we will have to close it right here. So thank you all, and back to you,